by half a percentage point to 5.5%. The prime lending rate will increase to 9% now. It's the first increase in nearly 6 years. After pushing to new lows against the US dollar this week, the South African rand has shown a 5.5% drop in value since the start of the year, making it one of the hardest hit emerging market currencies in 2014 so far. We are joined by senior economist Mike Schussler to talk about the increase of the repo rate, what it means for our economy, and what he forecasts for the rest of 2014. Good morning. Thanks for joining us.
Thank you, Evan.
Let's start with yesterday. What do you make of the Monetary Policy Committee's decision to increase the rate?
Well, we're known as one of the fragile five economies. With other words, we're one of those five economies that is living far beyond our means. And with that, I mean, if we were a household, we're spending around 7% more than we're earning. And we expect next year an increase of, say, 2 and 2.5%, but it's not making up that 7% shortfall that we're having every year. So ultimately, we have to rein in the spending because it's very difficult to increase your earnings overnight with the rest of the world, and it looks unlikely at this moment in time. And at the same time, this household also needs to spend some money on fixing the cracks in the wall, the door, and so on. And that, call it the infrastructure part, the Eskom, you know, the lights have got to work and everything, otherwise we can't work. So we don't make those lights ourselves, we import them. So that's where we are as a household. If I take it a step further and I say, here we are, and we are a lot of houses in the street, and all of us have been living beyond our means, but a lot of them are now starting to put up security fences because they see the robbers in the night coming. And we're the only ones left without a security fence. That makes it a very, very easy prospect for people to hammer. So we were virtually the last of those households to put up the security fence. And it's not quite up yet. But what we want to do is we want to actually just show people that we can still close the gate or put up the security fence. And we may still have to put a chain on the gate, and we may still have to put up barbed wire to keep the hunters at bay, so to speak. And that's where we are.
I wanted to ask you about, in practice, what yesterday's news would mean to the consumers out there, those households that are now saying, oh, suddenly we're earning less money.
Well, I think even for those households, it's very simple. They are now going to have to cut back. They're going to have to make some tough decisions. The easy decisions are probably going to be distinguished between needs and wants. So you want to go to a restaurant, but you need school clothes. So we're going to have to do that a lot more. The second thing that's going to happen is a lot of these households are going to remain under pressure for a long time because a lot of the households have also got people working in the restaurants. So the salaries aren't going to increase. In fact, it's going to look a little bit dimmer out there, and people are going to be a bit nervous. So ultimately, I think for a while, we're going to see interest rates rather rise. We're going to see households have to consume less, whether it's petrol or electricity even. And those are the type of things that are likely to happen in the next while. But that puts us on par then for the future, where we then can go and spend more again. Because we have been spending a little bit too much at the bar and the restaurant, and now the party is over. So the punch bowl, so to speak, is being withdrawn by the central bank. And the 6-pack of beer, you know, is only now a 4-pack of beer. And if we're not careful, it may be no beer anyway. So we have to be a little bit...
It's a collective tightening of the belt that needs to happen over the next year, you say, at least. At
least the next year or two, yes. I suspect it's a 2-year process. I don't think South Africa wants to go for a major crisis where we just allow people. I know people are under stress, and there are other things like toll fees and so on that have come and taken money away from your pocket and higher inflation. But imagine even higher inflation, and then interest rates have to go even higher. So the earlier we give the medicine, by taking the punch bowl away, by drinking less beer, by going out to the restaurant less, the easier it's going to be for us to recover. But it's never easy. This is a turnaround in the interest rate strategy. I don't think most people realized how quickly it was coming upon us. But the currencies did change quite quickly in the last 2 months. And it was quite frightening to see.
I wanted to talk to you about the battering that the rand has taken the last couple of months, and how that will affect the wider economy and then economic growth in the next medium term.
Well, I think the first thing is that economic growth is going to come down now. We typically don't fare well when the rand comes down. And second of all, it's very difficult to see where we're going to get extra exports from. I can see more tourists. That's certainly good news. I can see, more wine exports, a bit of food exports and so on.
Yeah.
But what I can't see is chrome or aluminium because we don't have the power. Coal, we don't have the locomotives or the railroad. We don't have the trains, we don't have the planes, we don't have... So we need to buy those things first. As I said, the house needs electricity first before we can work full steam again. So we're going to have to spend some time on correcting those things, and that's where I think the new jobs are going to be. So engineers are going to be very popular, and accountants less so, and the restaurants even less until the tourists start flocking back.
Do you see the rand going further south?
I think so. I think the rand is very likely. I was at a meeting the other day, and the prediction was 12 rand 50, not by me, but by somebody else. But I could well see 12 rand 50, or 12 or 13, but around there by the end of the year. I don't think it's an overnight thing, because this spotlight that's been shined on this household overspending only came about when the bigger household, the Americans, started saying, wait a minute, we've also got to stop this just printing of money. And that made people look around and say, okay, where are the weak points? And we stood up like a very bad place with a weak point.
You've got 30 seconds to give this consumer advice. What do they do now?
Well, distinguish between wants and needs, make room for savings, certainly, and I think look at the future in the longer term. Don't look at what you don't have now. Look at what you could have in 3, 4, 5 years' time.
Fantastic. Thank you very much for joining us today. Sound advice, sage advice with your money. We're going to turbulent times. It's not going to be easy for the next couple of years at least. And Mike Schussler says, distinguish between your wants and needs. Very important. Let's take a look at what you're thinking and saying on social media. Don't forget, we're being streamed live on YouTube.